Good afternoon. This is Courtney Mercer, Executive Director of Downtown New Jersey. Today I'm going to give you a policy briefing on legislation making its way through the Assembly, impacting tax incentives and your ability to redevelop. This afternoon I'll give you a brief overview of the legislation, discuss the impacts, some talking points you can use in your communications, and how you can take action. What does the legislation do? It imposes prevailing wage requirements on private projects that receive tax abatements or tax exemptions, in other words, pilots. There is an exception for nonprofit projects. It also imposes prevailing wage on any public work to which any public body is a party paid for in whole or in part out of funds of the public body. And finally, it also expands the application of public prevailing wage to public works on properties leased by public bodies. The current law only applies to properties leased 55% by a public body. The new bill will reduce the percentage to 35%. There is an exception for buildings under 20,000 square feet. What is a public work? It is very broad. It means construction, reconstruction, demolition, and here's the kicker, repair or maintenance. So if a building is leased 35% or more to a public body, that means that the workers doing the maintenance and repairs need to be making a prevailing wage. And it also means if you contract out for work over $50,000, that would also have to be bid at prevailing wages. So how does this impact your downtown? Well, on average, prevailing wage adds 20 to 30% to the cost of a project. Um, that gap needs to be filled somewhere. When a redevelopment project is given a tax incentive, it's generally because the margins are already thin and the profit's not really there to make it a viable project. So if you're adding an additional 20 to 30%, we have to figure out how to fill that gap. This impacts most redevelopment projects, as most of them do have some type of tax incentive built in. In particular, your higher cost redevelopment projects that include environmental remediation or perhaps some type of historic restoration. It also impacts any infrastructure, community benefits agreements that you have associated with any redevelopment projects. And finally, this could have a huge impact on affordable housing. We know there are 300 plus settlement agreements for affordable housing coming out of the courts, many of which include tax incentive packages to make the numbers work. This also impacts, and this is that second bullet from before where we're discussing that if something is paid for in whole or in part by a public body, affordable housing trust funds are public money. So trust fund projects would now be required to pay prevailing wage. So the consequences, how do you make this 20 to 30% fill this 20 to 30% gap? You either have to negotiate a larger incentive or a longer term incentive. If you can, if you're not already maxed out, increase project height and or density, perhaps reduce or eliminate any infrastructure or community benefits projects associated with that redevelopment project, reduce the number of affordable units in the project, and worst case scenario is you just can't fill that gap and the project is now no longer feasible and not going to happen. So when you're talking about this, um, you should think about, projects in your downtown that benefited from a tax incentive, and would they have still been feasible with this 20 to 30% cost increase? Are there projects in the pipeline that will include a tax incentive? Will they still be feasible with a 20 to 30% cost increase? Do you have affordable housing projects that are in jeopardy because of this cost increase? And do you have affordable housing trust funds to spend? And more importantly, did you figure out the spend of those trust funds helping you to meet your affordable housing requirements? And now, since you will get fewer units out of the same amount of funds, will you still be able to make those requirements? So what can you do? We ask that you call and write your legislators and share these specific examples that we discussed in the prior slide. We're also going to ask you to call and write the Assembly Appropriations Committee, which is where this bill will be heard next, we will alert you when the bill is scheduled. It's anticipated as early as the 24th, possibly the 3rd. We are also forming a coalition of organizations that oppose this legislation. You can find out more information about the coalition at downtownnj.com/action-alert. On that website is also where you'll find a policy brief and a sample letter to your legislators. We'd love, if you have questions, one, reach out at policy@downtownnj.com. And when you do your outreach, please let us know how it goes, who's for, who's against, were they wishy-washy. Send us an email again at policy@downtownnj.com. There is a mayor also forming a coalition of mayors and elected officials. We will provide information for how elected officials can join the coalition on our website as well. Again, please feel free to reach out with any questions or concerns. Thank you.